Hi guys and welcome to this week's Midweek with Indiacharts. I'm your host Muskan Kapoor and I'm joined here with Jay Bora. We're going to discuss how the market has been placed and what's going to happen in the future. So without any further ado, I will just get started with the questions. So moving to the Fed question, last time I remember we discussed that the Fed might not hike the rates, and that's exactly what happened. But a lot of people claim that the statement was a little hawkish. What do you think about that?
So yes, so actually last time's Fed meet was a bit of a googly. The reason being, it went on the expected lines that the Fed had, paused the rate hike. But the googly was when it delivered the speech. So it said that they are looking for two more rate hikes. Okay, now if that has to happen, then people ask that, then if you know that you're going to hike the rates by 2 times, then why not do it this and the next meet? So the Fed defended that we want to slow down the pace of the rate hike. So from 50 we came to 25. Now we will take a pause. We will do 25, probably a pause and then a 25. So that way they will slow down the pace. But many of the market commentator I heard, they are saying that probably the rates may not be hiked, and Fed is kind of trying to scare people. And so because see what happens is that whenever the Fed says that they are going to hike the rates, market starts pricing in. Okay. Yes. So that way yields may go higher, and then it can curb the demand to some extent, because right now also yesterday we got the building stars data, and that actually indicated now there is some sort of pickup that we are seeing in the housing market after a lull, because higher interest rates had affected the economy a little badly. So there was a slowdown, and there was a bit of concern in the housing market. But yesterday's building permits, if we see, building permits data and all, if we see, there has been some pickup in the housing market. So especially when I saw the yesterday's data, now frankly I'm getting a feeling that actually the economy is in very good shape. Okay, and now this can mean two things. Okay, either the inflation is likely to remain hot. Okay, because that means if economy is strong, then spending and all will keep happening, and that way inflation can become hot. Or the other thing is that probably the market is kind of adjusting to the new normal rates. Okay, because we can see that the rate hike has been done in last 12-15 months. That has not shaken the sentiment as of now. Okay, and also if we see purely by the price action, S&P seems to be doing well, and despite Feds being a little hawkish and saying that they may hike two more rates, it did not really affected S&P much. It went up. In past 2 days they have corrected a bit, and that is partly because there has been a one-way rally in S&P 500. But broadly, it looks like market is kind of absorbing that higher rates now. Higher for longer is now what people are factoring in, and we need to see how the economy shape ups as we go ahead. But as of now, it looks like that the economy is in good shape. S&P is doing well. Probably that is the reflection that we are seeing right now.
Correct. Makes sense. I would like to discuss S&P in a broader term also. So I just want to know how the dollar and the S&P 500 setup is there currently. Okay. And what is the position of S&P 500? I remember we discussed last time that the short positions were very high, but there were meaningful short coverings also. So they were covered. So what is happening currently?
Right. So I'll quickly share my screen. So first we will talk about the dollar index. So if we see the dollar index, actually there is a wait, I'll open it in investing. See, if we look at the dollar index and when we look at the weekly chart, it has actually formed a hidden bearish divergence. Now, hidden bearish divergence occur when there is a higher high on RSI but on prices there is lower high, which you can see over here. Okay. So you can see that there is a higher high on RSI, but there is a lower high on dollar index. So I'm assuming that the pullback in the dollar index is possibly complete and we should be heading lower. I think the major support level will be around this point, which is somewhere around 100.50 or 60, something like that. If that breaks decisively, that is when we can get a decline in the dollar index, and that should largely be positive for the equities. But the broader point is that I think the dollar index might have topped out over here and it is now resuming its downtrend. So for S&P 500 particularly, so over here, when we look at the daily chart, there has been a 5-wave rise that we have seen in the S&P 500, and we are seeing a normal pullback in S&P 500. The pullback can extend till this low, or it can even extend, probably till the 20-day average. But eventually, it is expected to pick up, because when we see the broader setup of S&P 500, like I had showed earlier as well, it has broken past the 61.8% retracement mark. So now actually, things are in favor of the bulls. And even if we see the CFTC data, so last week, there had been somewhere around 90,000 contracts of unwinding in the short position. So last week when the data was released, there hasn't been much of a short covering as of now. So that means that the shorts are still prevailing in the system, which means that there can be a further short covering that can happen in S&P. But everything doesn't go in one line, so there will be pullbacks from time to time. But I think directionally, S&P 500 is heading higher. So broadly, data, if you see the overall technical setup as well and the wave counts. So in terms of wave count, it is probably 1, 2, 1, 2, and third wave going on. So within third wave, there is 1, 2, 3, 4, 5 that can come by. Then there will be a pullback. Then it will keep inching higher. So that way, it should largely be positive for coming, couple of weeks to few weeks.
Correct.
I sense.
Makes sense. Let's just move and drift to the Indian market. So I've been looking at Nifty Midcap and Smallcap index, and we're seeing a runaway rally. What is the outlook there? How is the Nifty index poised as well?
Yeah. So I think, a lot of retail people are enjoying the small and the mid-cap rally. But we can see that there has been now 13 weeks of consecutive rise. It is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. Last time when we actually saw such kind of rally, there had been a prolonged sort of correction. Because similar kind of rally we had seen from 20th June. So it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12. Okay, so this was 12 weeks of consecutive rally. Now we are into 13th week. So at some point of time, there will be a minor degree correction that we are going to see. Okay, so one should not mix the view. So what we basically think is that in the near term, there is a risk of a minor degree correction, wherein probably the mid-cap index can come back to the 20-day average, or it can come back to the wave 4 of previous degree. But in the broader context, this is 1, 2, 1, 2, 3, 4, 5. So this will be 3. There will be again a decline in fourth wave, and ultimately it will inch higher. So that way, there can be some near-term pain, but broadly, from the medium-term perspective, the view looks bullish. Now, there is a reason why we believe that there can be some degree of correction, and that is because first I showed you 13 weeks of rally. That is one thing, because it has not seen in the past 13 weeks of rally sustaining, and other than that, the RSI, if we see, it is at 90 sort of levels. So a knee-jerk reaction can be a possibility. So like I said, that when that knee-jerk reaction does come by, it can probably test the 20-day average, or it can fall back to wave 4 of previous degree, and that is when again it can start inching higher. Now if we see the small cap index, it is no different. It has exactly similar setup, but over here you can see that it is not still back to the previous high. But when we look at the weekly chart, again over here it is 13 weeks of up move. When we look at the daily chart, there is a high RSI reading, and in small cap index there is a negative divergence which is still there. Okay, in mid cap index actually there was this negative divergence, but today with today's up move, the negative divergence is negated over there, but in the small cap index it is still there. So the first thing which can suggest that we will see some sort of correction in the near term will be a negative daily close. Once we get a negative daily close, that will be an initial warning signs. And after that, we have to look at the blue line, which is the 40-hour exponential average. If that breaks, then that will be a confirmation that we are setting for a near-term correction, in which the correction up to the 20-day, or like I said, previous wave 4, that may open up. Similar is true for the Nifty index, Nifty Midcap index as well. Now, when we look at the Nifty index, it is actually doing a different thing altogether. So Nifty index right now is at a very important point in terms of we deciding what the wave count is, because so far we have been counting 1, 2, 3, 4, 5. Typically after a 5-wave rise we can see a deep correction, and then after it can see the up move continuing. Okay, so from the longer term perspective, one good thing is that since we have seen a 5-wave rise, that means that this low should ideally not be broken in the medium term, or probably in the long term as well. Okay, so all it would mean is that a 5-wave rise is complete, there will be a pullback, and then there will be an up move. But now one interesting thing that is developing is that wave 1 was actually larger than wave 3. Okay, which means that wave 5 should be shorter, because this is a case where wave 1 is greater than wave 3, and ideally wave 3 should be greater than wave 5. So the point of negation of that is basically, I think, 18,000, but I'll just check it. So actually, yes, the negation point is 18,990. If it breaks above that, okay, if the Nifty index in this ongoing rally breaks above 18,990, which means that wave 5 will actually become greater than wave 3, and it will negate the rule. So if that happens, then the entire wave count needs to be changed to 1, 2. Then again, this will be 1, 2. Then there will be 3, 4, 3, 4, and 5 that can come by. So breaking above 18,990 will actually be very bullish, and that would mean that there will be some sort of corrections that we will see from time to time. But similar to the mid-cap index, it will continue to inch higher. Okay. Now, the reason why I say it is important for Nifty index to confirm that wave count is because when we look at the Nifty Bank index, there is sort of a divergence that is happening. So wait, let me delete these studies. So when we look at the banking index, you can see that it is making lower high, lower lows. Okay, unlike Nifty. And Nifty Bank index is actually a larger part of the Nifty index, right? So such sort of divergence cannot prevail for a very long time. Either Bank Nifty has to catch up, or the Nifty has to go down, and it will eventually follow Bank Nifty. So this is why we are very closely watching 18,990 kind of level. Technically, Bank Nifty is actually at a very good support level, which is 40-day average, and it is trying to bounce back from that. If the Bank Nifty breaks below the 40-day exponential average and it sustains below that, then there is a high chance that Nifty might also complete that 5-wave rise and it can probably see a deeper correction. So we will see how things play out. But such sort of divergence between the Nifty and the Bank Nifty is in the past as well, it hasn't sustained for a long time. So either it is telling us that either one of the index is doing things incorrectly. Either the downtrend which we are seeing in the Bank Nifty is wrong, or the uptrend right now we are seeing in the Nifty index is probably wrong, and Nifty index will eventually see a correction. So like I mentioned, I am highlighting this level once again because it is very important. 18,991, ideally that level should not be breached. If that gets broken on the upside, then the entire wave count will change. And then, thinking of a deeper correction might, that idea will kind of fail. And maybe there will be a pullback probably up till 20-day or the 40-day, and it will keep inching higher. So that is how, the Indian markets are poised. So we are actually at a very, we can say that at a point which can be, very decisive as to how, coming future will be. In the coming months, how the Nifty is going to behave. But broadly, yes, there has been some divergence which needs to be resolved. So, once again, the broader, you can say, view is that Nifty is structurally now moving higher, okay, with minor hiccups in between. So all we are trying to time is those minor hiccups and, not to get, too carried away by every day's up move. Because actually I was seeing, so this is 30th May, right? The price you can see, the high Nifty has made over here is 18,662. And today it is barely 1% up. In last 20 days, Nifty has largely done nothing. It has been in a sideways consolidation. So, not to get too carried away with how, Nifty is behaving, because right now we are able to see divergence in the Nifty index. So I'm not sure if this up move is going to stretch, and the Nifty and the momentum index will keep continuing this divergence. But yes, as long as the Nifty index is about 20-day average, you can expect, this sort of slow grind to continue. But the ideal setup will actually be that if the Nifty index, test the 20-day average or the 40-day average, and then it starts moving higher, that's where, the risk reward will actually start getting in your favor. So, probably in the near term, there can be some correction that can be expected, but largely in the coming weeks and months, we are probably headed higher.
Makes sense. The overall setup does as well. If I look at it, it looks like a so far so good situation, but anything can happen at any time. So we should also be aware of the surroundings. But yes.
Yes.
Makes sense. Thank you so much.
Thank you.